This is this is how we start off our shows. Okay, we start off on the left side, and we go. Huddle, huddle, huddle. Save, save, save. Build a, build a, build a. Sound money, sound money. All right. And huddle, huddle, huddle. Save, save, save. Build a, build a, build a. Sound money, sound money. Hey. Huddle, huddle, huddle. Save, save, save. Build a, build a, build a. Sound money, sound money. Hey. Huddle, huddle, huddle. Save, save, save. Build a, build a, build a. Sound money, sound money. All right. Save, save, save. Build a, build a, build a. Sound money, sound money. Save, save, save. Build a, build a, build a. Sound money, sound money. Hey. Save, save, save. Build a, build a, build a. Sound money, sound money. Hey. Save, save, save. Build a, build a, build a. Sound money, sound money. Save, save, save. Build a, build a, build a. Sound money, sound money. We're gonna do this. This is how we start off our shows. Okay, we start off on the left side, and we go. Huddle, huddle, huddle. Save, save, save. Build a, build a, build a. Sound money, sound money. All right. And huddle, huddle, huddle. Save, save, save. Build a, build a, build a. Sound money, sound money. Hey. Huddle, huddle, huddle. Save, save,
Huddle, save, save, save. Build a, build a, build a. Sound money, sound money. All right, it's Ugly Old Goat here. It is August 19th, 2024. And the headline today, guys, is I've been saying this now for a month. This gold market's getting ready to take off. It just kind of hits new highs daily. And there's a headline from Kitco, and we're going to kind of examine the fundamentals. We'll look at the markets real quick first, and then we're going to go do a little fundamental analysis. Here is that's a gold-silver ratio. Let's see where the gold is. Okay, here's the gold price, and here's the weekly chart, and you can see we hit new highs. We're holding in here. This market's just very strong. We are approaching this is the weekly 9, so I don't think it might pause up in here, but I don't think it's going to pause for much or for very long. This is a beginning of a huge bull market in gold. So I keep that in mind. We can look at the other markets. Here's the Bitcoin market. Again, nothing really going on there. We're still in this range. Are we going to go down and break this low? Very possible that we can. Very possible we can have some kind of an event that takes Bitcoin below 40,000 again. I'd be kind of surprised. I'm not looking for it. It's not a prediction, but it's basically what you have to keep in mind for your risk management. And let's go here. We'll look real quick at the stock market, and it has just exploded. I mean, this thing took out the 2-week high. So to me, all these bearish expectations, it just reversed itself. So, but now you've got problems, if you hit new highs again. So what you're saying is Bitcoin is actually the worst performing asset right now compared to both gold and the stock market. The stock market is surprising me. but I'm sure it is anticipating that Trump is going to get reelected and that he's just going to make everything hunky-dory, and I think that's an illusion. We've got much bigger problems ahead in the United States economy, which, by the way, I just tweeted this one out. Where is on the Twitter? Should I do it? Okay. I just tweeted this out. I retweeted it. This is a interview with Jose and Flores, and I met him in La Paz. We had a little Bitcoin conference down there, and they're really on the cutting edge here in Mexico and the Latin America. And if you look to, let's go to my post. I made this little comment. Oops, where's me? How do I get to my? Down here? Here? Home? I don't know how to get to it.
All the way there.
There?
No.
Where?
The profile.
This one?
Yes.
Oh, okay. All right. All right. So here we go. This is a great interview. In fact, I just started listening to it, but it kind of outlines what he's doing. Things are really popping. He's building a very sound foundation here in Mexico and all over the Americas. And you know what? I have much more confidence in that that LATM, that Latin America is going to make America great again. It's a new shining light on the hill. Forget the USA. Latin America is where the hope is, because they really have, it's a different culture, but they really have picked up a lot of the freedom loving ideas that we have forsaken in the United States. So this is an interview. I haven't listened to it all yet, but I do recommend you go to it. I'm going to, and we'll see if we can get Jose to come on this show here too. Again, I'm just getting back into this. I've been out of it for over a year. And let's go look at the fundamentals. Again, the key here, I think, is the gold market. The gold market, the only thing that's surprising me now is the strength of the stock market. I would tend to think that the stock market strength, if there's a run-up during the Trump administration, it'll be kind of the last hurrah, I believe. But let's go look at one of my old articles. This is the three greatest, why is gold doing what it's doing? Well, we look at some of the swindles, like the FTX swindle and all these swindles that have gone on here in the crypto market, but they are pale compared, and even corporate America, the swindles that have gone on, they are pale compared to the three greatest swindles of all time. And this was identified by my mentor, E.C. Harwood. And I actually made a gold coin with him on it. I think it's right here. Way back in, this is 1987. I think we made the first one in 1979. And that's part of my old history. I was once in the gold market. And still, gold is sound money, guys. Bitcoin sound money. In fact, I'm of the opinion that the only thing that could really, and I don't think Bitcoin has a use case. I mean, it's here to stay. It's not going anywhere. But if we restore sound money, part of the use case of Bitcoin will wither away. The use case for Bitcoin is that it's unconfiscatable. Gold is a physical asset. It can be taken from you. The problem what we're having now is we have all these Bitcoin crony capitalists that are actually trying to merge a bankrupt financial system with Bitcoin. That's a huge mistake. Every time, it's going to become self-evident, and it's a very sad commentary. And some of these people that are in Bitcoin and proclaim, "Oh, we're all for a free market," you're speaking out of both sides of your mouth. You're not for a free market. You're up there lobbying, and your state legislators lobbying in Washington to have special benefits for you. You're lining up to get in the trough. Now, this is something that's not new. It's been going on for a long time. This is what we're looking at right now. Let's go look at the three greatest swindles that all time that E.T. Harwood outlines is number one is inflation, and that's the number one culprit. Number two, he identified at the time. Now remember, he passed away, I don't know, 40 years ago. But the second greatest swindle is Social Security. And it is a lie. And no insurance company can legally operate the way the Social Security operates. Now, actually, the Social Security system was instituted by FDR, Franklin Delano Roosevelt, but it was just the beginning. We now have the government in almost every aspect of life, in education, student loans. We have, we got food. We're now, buying plane tickets for illegal immigrants. It's whatever we're creating money for whatever special interest there is out there, and that is. So it's entitlements. It's the entitlement program that is basically you're stealing from protective citizens to give it. Sometimes it's to other protective citizens, but it's basically you've got this war of the people against the people, and they're all fighting for this omnipotent power that's called the United States government. And then, of course, the last greatest swindle of all time is regulation. And that's why I say you have all these Bitcoin crony capitalists, and they're phonies. They say they're for sound money. They're not. I mean, they're two-faced liars. That's who they are. And I'll tell them right now, if you're up there and watching, oh, yeah, we need to regulate the market. We don't just this kind of a legislation. Oh, yes, for this or for that. We just a little bit. No, a free market's a free market. And you know what? If you don't like a free market, just say so. You believe in not having free markets. You believe in regulated markets. And, I don't. I just don't. Show me where there's not consequences. Show me, please. All right. So let's go look at, the nice thing about turning 75, I get to be a grumpy old man and I can almost say whatever I want. I'm not going to be limited like so many other people to say what they really think. And so I guess I'm going to be like that InfoWar guy that goes into rants. So I just kind of Googled this, and these are some good questions that just come up, and the arguments are are great to look at. And do the baby boomers realize that their Social Security benefits are being paid by millennials? Well, exactly, they do. And this is, it's kind of sad that most people think, well, I paid into it my whole life. Well, yes, we have. And our grandparents actually were the ones that did this. There's a response here somewhere. Oh, here's another one. Is it time for baby boomers to forfeit their Social Security to the younger generation? And there was one comment, maybe it was in the other one, where they talk about their grandparents. And yes, this is exactly what happened. Like if I take my grandparents, and bless their hearts, I had wonderful grandparents, both sides of my family. But my grandfather was a school teacher, a Lutheran school teacher, and by the time they put in Social Security, I think he worked maybe 2 years and then collected Social, and he lived to be 92 years old. I mean, he made out like a gangbuster on Social Security. But this is just another example where people voted themselves into the monetary trough. And basically, my father contributed, all that my father's generation provided the Social Security benefits for my grandparents. And then the same thing with my father, who died at 87. And the problem is it's a Ponzi scheme, and it does depend on the population, the current population supporting the older generation. And it causes resentment, and rightfully so. It's not a unifying force. And here's a great article too. I put all these links on the notes if you can too. But it says by 2031, when the youngest boomers have reached 67, Americans ages 65 and older are projected to be 75 million people, and that's nearly double from 39 million in 2008. So the beneficiary to worker ratio, which compares the number of people drawing benefits to the number of workers paying into Social Security, will rise from 35 to 100 to 44 per 100 in 2030. All right, so this is the problem with the system right now. This is part of what's going to be manifested, and the only way that we're going to solve this problem is they're going to have to inflate it away. But this causes all other kinds of problems. And again, if you have in an inflationary scenario, you're just jumping from one investment to another to try to keep your head above water. Which assets are going to boom and which assets are going to fail, and that is the problem. Sound money solves this problem. Once you have sound money, then you don't have the rampant speculation that you're seeing now, and that is promising to even get worse, I think, in the years ahead. And again, what I'm seeing in these markets is a huge bull market coming in gold. Now, I don't see I don't see Bitcoin going down. I think Bitcoin's still going to be a great asset. You still it will. The beauty about Bitcoin is it can't be confiscated so long as you own your own keys. But it is a savings program, and really is, I think it's showing that it's really not suitable as money. Actually, it's your shit coins that you want to get rid of, but you can efficiently send wealth through some of these other mechanisms, particularly through the U.S. dollar stable coins. In this case, Roger Ver kind of has a case. If cash, if you become the standard, if you have a Bitcoin standard, which I think we have a Bitcoin standard, it will never be used as cash. Gold was never used for cash, except in one case that I found, well, two cases. When civilizations are in a transition, that physical ownership, it's when you in a barter economy where you really don't have sound money, then gold is used. But the case where, really the case study that shows that a cash is when a commodity becomes a standard, it's not used as cash. The only exceptions that I have found is the California gold rush. Gold was used as cash because it was the most plentiful commodity around. There was lots of gold in California, but there weren't many Levi's, there weren't many tents, there weren't many picks and shovels, and there wasn't any coffee. People were after the gold because they knew what gold was worth, but gold was worth a whole lot more in New York than it was in San Francisco. Or Sacramento particularly, because even getting it from Sacramento to San Francisco was a big job. So you need to understand a little bit about money, and I think this is one thing. I want to look at the gold-silver ratio too, because one of the things that I think you're going to see, and I do think, I'm the only one saying this out loud, but I think that the United States government or a government of the world, maybe many at the same time, will resurrect the gold standard. They're not going to do it because they want to. They're going to have to do it in order to restore their economies. Now, here's the gold-silver ratio, and this is the monthly chart here. Now, if you study the gold-silver ratio, there was a time, and fixed prices never work, but when we were on a gold standard, the United States government tried to fix the price of silver to the price of gold. They said 15 ounces of silver were worth 1 ounce of gold, and so that was the ratio. And that held and held, and I don't have a long-term chart. This is just recent history. Let's see how far back this goes. I don't think it goes back very far. Yeah, it goes back to 1998. But you did see that it did drop down here about 35 to 1, but it used to be, I remember when it was 15 to 1. And now you've taken this thing and had this. Now, I'm not looking for gold or silver to follow the gold market. Gold, if you notice, is trading in contract highs. And the silver gold, if you look at the silver chart, you know, I probably ought to put up the silver chart. But if you look at in fact, let's pull up the silver chart. How do I do that? Silver, can you type that in, silver trading view? What you're going to see is the silver chart is a long way from contract highs. So while the silver market will go up in sympathy with the gold, okay, this one, all right. So let's go look at this. Let's go look at a long-term chart, and it looks completely different from, all right, boom. Now, okay, here is, you have the same pattern. If you notice, you have this 10-year, basically from, no, this is 2020, okay. You have the same, now we had this boom back here in 2011, 2012, where the market went up to $50, which was the old high. During the hunt bubble, that's where we took silver, took it up to $50. And it never really exceeded those highs, and then it came back down. And you have the same pattern where you have a big cup now, but you have this handle, but it's really not going anywhere. And the difference between gold and silver is you've got all kinds of resistance. Now, silver might go into new highs. It may take out $50, but it's not going to go up like gold. Now, let's go look at the gold and compare it to silver. All right. Let's go look at the monthly. Do you see the difference here, guys? Look at the difference. This is a raging bull market. This has nothing to stop it. Once you're in contract highs, you do not want to sell gold short right now under any circumstances. I don't know what's up, but I foresee that we are going to be resurrecting some kind of a gold standard, and it will probably be revalued sharp. In other words, gold, the dollar will be redefined as a certain amount of gold. But that amount will probably be about 10 times where it is right now. And that'll be it. Then you know, there's no reason to own gold anymore because you have a sound currency. In fact, you'll see a long decline in gold prices. And you know, the difference is, if we have money competition, if we have Bitcoin, they're competing with gold. That in itself acts as a safety valve, as a catalyst to maintain sound money. Because governments will realize, hey, if people leave they'll leave their national currency for a national currency that, you know, is holding a sound gold reserve, or they'll go into Bitcoin. And so this is the kind of currency competition that you know, I think will in the long run provide hope for civilization. At least I hope so. So this is what I'm looking for. I think this is a strong, again, look at this chart, see the difference, see how we're in new highs. We can go back here, see how we're way above these highs that we made back here in 2011. We go to this one? No, this one? Oh, okay. And here's the gold, and you can see the difference. You know, I mean, this is silver. Yes, this is silver. And there's just a huge difference here. And silver just has resistance all the way up. It's not going to go, you know, it's going to go in sympathy to the bull market. But if you're buying silver, and the other thing is too, I think they can come up with a coinage that won't be, it could be kind of the junk coinage that we have now. It won't have to be silver or nickel or copper. That's not the important thing. The important thing is that you do have some kind of change, cash, that can be used in the marketplace. And this is a function, a proper function of government, where they can issue dollars and paper species and coinage with a face value of the convertibility in gold. And so I remember the days of silver, and silver was just kind of it was a dirty coinage. It was tarnished, and they kind of felt it was heavy. I mean, you knew you had something because it wasn't some kind of light paper thing. It was heavy, but it was. But silver, you know, I don't think that the reason we had silver coinage basically was because of the silver interests in Idaho. It's the same old thing we had now. They had their big lobbies in Washington. They are the ones that wanted the gold price and silver price fixed so they could sell their silver and put it on the gold standard. And so, and they actually made it mandatory. And this is the same kind of crap that we're hearing now. I mean, Robert F. Kennedy wants to, I mean, it's pure politics. They want to build a Bitcoin reserve. Trump wants to put the unconfiscated, the confiscated Bitcoin into a strategic reserve, and yet the Biden administration is moving the Bitcoin onto exchanges with the threat of selling it. So, you know, just it's the same. This is the same problem that we've always had. What we're having is everybody. The inflation game is fought in Washington, and this is where everybody's playing the game right now. I wanted to read a little bit too about this because, hey, you guys, you know, I teach trading techniques, and I teach equity trading, and I wanted to read this. You know, is this the article? Yes. All right. Okay. In the addendum, The Road to Wealth, my mentor, E.C. Harwood, he revealed himself as the original hodler. Now, the way he hodled was through gold. And again, he is part of the influence that and just through experience. And I haven't learned this perfectly myself yet because, again, if everybody knows, a year ago, my lovely wife left me and decided she didn't want to be my wife anymore or the mother to our child. And unfortunately, I trusted her so much. She's got all the property, so now I have a big legal battle. Hopefully, she'll come to her senses. But if she doesn't, I have to protect myself. But that was my own poor money management. But in trading, there's all kinds of things out there where people promise they're, here. And I've literally you guys have seen me do it publicly. I've taken $5,000 and made it into over $1 million. And I've done it more than once publicly and showed you that it can be done. It takes perseverance, but you have to, right now I'm not even trading because I've got these other problems. But I want to read this because this, I think, is some of the wisest, timeless advice that I got from my mentor, E.C. Harwood. And he said, during more than a half a century, I've read hundreds of different investment advisory letters or bulletins. Now, back then, in those days, that's what we had. They'd send them by the mail. You'd get them maybe once a week or once a month or once a quarter. And different people's analysis of the market. And E.C. Harwood has started the American Institute for Economic Research, and they do a lot of economic research. But he said there must be few, if any, that achieved the substantial circulation during those decades that I've not read over periods of ranging several weeks to a few years. So he was reading every financial publication he could get his hands on and looking at all their forecasts and predictions. And this is why I don't make forecasts. I do try and outline risks. This is why I teach trade your equity, don't trade the markets. He said by far, most of them attempted to forecast market trends. Only a few tried to outguess the short-term days or a few weeks changes, and I do not recall one that was not soon discredited. The great majority strive to forecast the longer trends ranging from a few months to a few years, the latter being known as cyclical trends because of their relation to the business cycle changes. Some who make a fortune forecast then make a fortune forecast then capitalize on it by advertising it extensively by mail or financial journals. It's like people that advertise through Facebook and through bots and YouTube, promoting their latest success or hindsight success. Thus, they acquire a list of subscribers and inquirers who unwittingly help the service to survive when it happens to guess badly a few times. The sucker list is then rented out and exchanged to other investment advisory services whose recent guesses have been more fortunate. Thus, some investment advisory organizations of this type can continue on for a long time. Others who try and outguess the cyclical trends may survive a few years, but even some of the most respected, such as Harvard Economic Service in the 1920s, have succumbed after a few bad guesses. At least one widely known investment service found another way to beat the game. It owns several advisory services, and this is true today. A lot of these advisory services, they have more than one branch, and they'll say one thing with this service and one thing with another service, and they change it, and they actually exchange the same database. So, and this was going on way back when. So they own several advisory services, and their advice differs enough so that fit. In fact, they hedge their bets. They'll go. One will predict one way and one will predict the other way. If one of the group has a bad luck for a time, its list of subscribers can be used as a mailing list by others for a few years, and by this means one or another of the group almost always has a basis in recent lucky guesses for attracting new subscribers. Now, the underlying reason for the continued existence of such investment services is the greed and gullibility of so many investors. The long-term decade or two charts of stock prices or prices in almost any other market suggest that anyone who could foresee the trends of several months or a few years soon could make a fortune. Now, there are opportunities that come along. Until I saw Bitcoin in 2013, until I saw what it was, I couldn't buy enough of it. So there are fundamentals that protect themselves. Now, I'm like, Bitcoin is still a wonderful thing. It's a great savings program, but I think right now, if you look at the fundamentals and what's going on the market, I think their gold market is more likely to reemerge as money as a standard than Bitcoin. Bitcoin can be a standard also, but it's not going to be the standard in the way that gold has been, and I think likely will return to be. Bitcoin is non-physical, it's digital, it can't be confiscated. Gold is physical. Gold is wonderful to have as a security within a country. And it's tangible. People understand it. You don't have the educational obstacles that you have in Bitcoin. And I believe in a Bitcoin standard, but it's not easy. It really isn't. In fact, I've written a book on it, how to put yourself on the Bitcoin standard. And there it is. Whoops, what happened? Are we? Okay. I kind of outline all that. I also have my book on equity trading, guys. Trade your equity. That's why I'm not here. I don't know what happened. Okay. All right. Okay. All right. All right. So I need that back so I can scroll down. Okay. Okay, so basically, now most of these people online on the YouTube that make all these projections and forecasts and how they make all this money in the markets, I think they believe that they have some kind of formula to success. But And I agree with E.C. Harwood here. He observed over 50 years. He'd never known even one whose personal fortune reflected the supposed forecasting ability. Uh, and there, like I say, very few of these people publish their trades. If a trading advisor does not publish all their trades, then they're not really worth following. There are a few that do. I do. I know Trader Tom does, and there's a few others. But all these promoters on YouTube that are predicting, fast riches, you can you just need to discount them. Okay. So this is the idea. Buying and selling and holding stocks was actually the same road to wealth. The same road to wealth that a lot of people have had in Bitcoin has also been the standard, not as much so as Bitcoin, but it has been the road to wealth for most people. So this is why we come into the dollar cost averaging, and this is why this is outdated now, but this is the article that I wrote. And again, what I teach is based on principles that I learned from my mentors. And my primary mentor is E.C. Harwood. So trade your equity, don't trade the markets. Right now, it's a great time to be accumulating gold. Again, the stock market, it's recovered amazingly well, but I think you want to be leaning into gold right now. All right. Well, I think I've covered everything. Again, nothing going on. Let's look at the seasonal. Boom. Okay. All right. Here's what we're looking at. We're in a now. Gold has a similar seasonal. First 2 weeks of August are usually the lows. I think the lows are in on gold. I think gold's just going to do nothing but be going up for the rest of this year and probably all of next year. We probably have at least a year and a half, 2 year bull market, which will go to unimaginable heights. President Trump is not going to be able to control inflation. He's already hard baked into the inflationary scenario. Here's your Bitcoin seasonal. It's very similar. It tends to make a low between August and October, and it looks like we're doing that now. So great time to be accumulating Bitcoin, but there's no reason to think that it's going to be outperforming gold in the near future. All right, guys, if you want to support what I'm doing, again, we're doing this every day at 1 o'clock, Monday through Thursday. I hope this helps. If you want to support me, hey, buy the Equity Trading Start Kit. You'll get both of my books signed. You'll get a Jade wallet, all this stuff. You're not going to get the mug. We reserve that for our boot camp guys that subscribe to our boot camp. But here's the way to support me. You get a discount if you pay in Bitcoin. And the other thing you can do is, hey, sign up for my boot camp. I'm still working on. Yeah. So here is outline on it. I want you to read this before you sign up, and then just hit this, book a call with me, and then I'll do an interview with you. Where is it? You got to go through all this all the way to the bottom, and you can book a call, and we will. I'll schedule a call with you, and then see if this is for you. Guys, if you don't have a HODL, the boot camp is not for you. If you have a HODL and you want to learn, how to trade your equity rather than the markets, how to manage it well, and how to hedge your Bitcoin, then this is for you. If you've consistently been trading Bitcoin and you lose year after year, we need to put an end to that, and we can it just what we do. It's a boot camp. I'm going to break you down and then build you back up. You have to throw away your charts and get rid of your bad habits and put in new ones. Again, what I teach is, most large traders become small traders, and a few small traders become large traders, but the wise large trader chooses to become a small trader again. You want to be doing productive enterprises. You want to be producing wealth. You also have assets, and you do have to allocate them and trade them. But you have to do it proportionately. Now, the beauty about Bitcoin is it is the one asset that cannot be, it gives you liquidity, and it can't be seized from you. And so, that is the purpose behind Bitcoin. And all right, well, I'm done for the day. We'll get back tomorrow. And again, I think there's some news. The Fed's coming out with their economic policies. But guys, don't trade the politics. That's not what you trade. There's going to be news all the time coming in and out of the market. Just a month ago, we had a near assassination of Trump. And yet, even if it would happen, time would pass. The world moves on. And so you just can't get caught up emotionally on the news events. And you don't trade according to the news events. You want to trade according to the fundamentals. Right now, the fundamentals on Bitcoin are great. The fundamentals on gold, I think, are spectacular. The fundamentals of the United States are not good. So I do recommend if you need to have, you need to take, either have an exit strategy or prepare yourself where you're at for the difficult times that I think we're going to see in the next decade. All right, we'll see you tomorrow, and see you then. Bye-bye.